Good morning, everyone. I come from Telenor Group, which again might be a brand that not everybody's familiar with. It's the Norwegian incumbent player, if you like, been around for 150 years. Only going abroad for the last, say, 15 or so. Unlike many European mobile network operators, Telenor has travelled quite far, actually. And today we have operations in 5 Asian countries, and those are certain markets where we expect the growth to come going forward. And we've had a very interesting journey over the last 15 years. We first started out to the Grameen zone in Bangladesh. Started out in 1997. I think we have, for a number of years, been looking at other ways. We've had the voice service, which is the killer application for a number of years, and the SMS service, and all of a sudden you've opened up a new universe with internet connections and what can data do. But we've also been looking at, like the gentleman from the ITU said, all the other sort of E or M, like mobile services, M health, M education, so on, and M finance or mobile financial services has come up as one of the most attractive ones to pursue if you can actually have a successful business model. And it probably started out with remittances. You have people got typically their son working in, say, after example, in Dubai, traveling from Bangladesh, and there's a need to send money back to Bangladesh. That's it. But I think since 2009, probably when we started out to see that there was new possibilities, and particularly, I think the example of Pakistan with CYFI is the most interesting one from our portfolio. One of the things that we decided when we sort of tried to look at this market was to get a better understanding of what sort of impact we would create in the market where possibly we or others could deliver a banking service via the mobile phone. So we commissioned the Boston Consulting Group to do a study for us, which was about the social economic impact of mobile financial services, and possibly going all the way adding all the services we now talk about. And what they tried to do is to make some projections for the next decades, over the years from now, today, and for the next 10 years, and it's not specifically Telenor relevant, it's about 5 different markets, 4 of them in Asia and 1 in Europe. We looked at Pakistan, India, Bangladesh, Malaysia, and Serbia. For those of the countries that are under study by I'm going to share with you some of the highlights from that study, which is available on our website. So here's the sort of the major point why this is an attractive option. There are today in the developing world some 2.5 billion people who are currently unbanked, 72% of that attractive population. But we also know that some 2.5 billion people in the world have access to, either they own their own mobile phone or they have access to a mobile phone. So that leaves us with some 2 billion unbanked mobile users who could potentially be served through mobile financial services. We sometimes, I think, are guilty of underestimating the sophisticated way that money travels in the developing world. There are certainly a lot of solutions available today, and I think some were mentioned by my colleague from Millicom, that bus drivers typically have the role of transporting money across great distances. What you find is that people currently, they borrow or they lend from their friends and relatives. That's a very, very typical thing. You get short-term credit by people borrowing from landlords, shopkeepers, employers. There's a set of trusted people in these people's world that they might turn to if they need money. There are informal savings clubs, so-called. They were news to me when I heard about them the first time, but they are certainly quite sophisticated way people find or actually getting access to money. The less attractive options are probably with the illegal money lenders, and also there will be risks associated with all this. The thing is that these people are often described as the ones who are living on either $2 a day or $5 a day, and in our minds we kind of grew up at a picture where they receive in their hand every morning those $2 or $5, which makes life life easy for them. The trouble is there's a lot more volatility in their financial situation than that. Very often they go for a long period of time without any money coming in whatsoever, and then all of a sudden there's a chunk of cash that comes in. How do you manage your economy in that kind of situation? And then a lot of these people are also exposed to what we call financial shocks. All of a sudden you need a large chunk of money. How do you access it? And that's what we turn to all those channels that are now through trying to raise money and not use through the crypto. Very often, there could be negative things. You might have a health bill to pay, or there may be, one of your children might get married and you need cash to actually get. What they all have in common, these options, is that they're costly, they're non-transparent, and they're certainly risky. And as described, they're often slow cumbersome processes. So, why are so many people currently not financially included? Well, typically we found that there are somewhere between 15 and 30% that are not included because, well, there's a certain group that don't see any need whatsoever. There are some cultural and religious issues that we have to grapple with. There are some people who feel, or for various reasons, are not eligible for entering into the practical frameworks required to establish an account. And there are some people who are victims of discrimination, real or perceived. And then there is a larger group, some 70 to 85%, that grapple with other items of problems. First of all, the high perceived cost of being a bank customer. The kind of products that banks are developing are certainly not suited to them. There is a sheer lack of access. This is something that we mentioned a number of times yesterday and this morning as well. And they don't have the kind of income so the banks want, or the banks consider to be high risk customers. And on the right hand side we see an interesting picture, because what you typically see is that a bank will get some 80% of their profits from 20% of the customers out of the bank population, which leaves a long sort of tail of customers that the banks don't consider to be profitable. Cost of operating is simply too high. And I think there was one mentioned yesterday that these customers were redlining. I think that's a possible parallel to that. Anyway, at the end of the day, the thing is that banks don't find it attractive to develop products for this group. Here's where I think the mobile operators can bring some advantages, so to speak. First of all, you can actually focus on a much wider customer segment. There is a device that people already have access to, as the first slide showed, and it's a secure device. There is already an existing customer relationship between the people who own mobile phones and have a relationship with their mobile operator. The brands are typically trusted. They've spent a lot of time building this trust, obviously, but there is a trust from the customer and the mobile operator. And the one fantastic thing, obviously, is this huge distribution network, especially in these economies where top-ups are the rule. So, like my colleague from Breakout described, the same kind of situation is relevant for our markets. Very sort of cash economy, very small top-ups, typically, and that requires a huge set of this is just to show you that, given the scenario, you get an optimal development and growth of mobile financial services, it could positively impact GDP in the countries that often something looked at. And I think for India and Pakistan, certainly a 5% increase or a 3% increase in Pakistan, those are attractive figures to certain kinds of state. It should certainly be something to be looked into by the government. How big by most. You can see interesting in the countries such as Malaysia, where financial inclusion isn't such a big problem. The potential of GDP growth is much smaller. And then, coming as I do from the corporate responsibility team in Telenor Group, we've tried to look at also other ways that actually actually only a mobile or a bank account through your mobile can make your quality of life better for a number of people. And one of the examples that we use is Bangladesh here and, on the left-hand side, where you regrettably have tragic floods causing great devastation happening on average some every 5 years. And they last up to 35 days and they affect a great chunk of the population. And most of the damage, no surprise, affects their crops, which means their livelihood and their property, obviously. And if you are able to have a bank account and set aside funds for these kinds of events, you will get, over time, a more resilient population. They will be able to get out of their troubles because they have a chunk set aside and get through those kinds of things. We've had also tragic events in Pakistan in recent years, with the earthquake, and there were floods, dramatic floods, both last year and the year before that. And during that period, the easy finder service that we're operating was used to solicit donation and also to distribute donation. Something we also repeated in Haiti later on with great success, actually bringing funds out to the needy people after the disasters as well. Some great examples from Kenya. It's always as an example that people mention when I go out and talk about these things. They've come quite far and further than we've done in most of our markets. And one of the really interesting things there is also the way they've done insurance. So if you've got devastating weather conditions where crops are destroyed, you can actually get an insurance. Very, very simple. Basically what they do is they check whether or not these weather conditions are actually applicable to the area and payments are dispersed. And that's certainly something that we will be looking for in our markets as well, but we haven't come as far as that. There are ways, I mentioned these health shocks that most people regrettably find themselves victims of. And I think that what you look at is that it's probably the leading source of the kind of financial shocks that poor people typically are exposed to. And I think that, again, having access to a savings account, having access to insurance, and also sort of care payments, again, all of those things can be or can make life much easier and actually get you back on your feet much quicker. Again, making a more resilient population is what I'd like to drive home. That's the key message. You can, with very, very simple means, build a population mindset to withstand those kinds of shocks.